The New York Times is facing a bit of a luxury problem for a change. Yesterday it came out that it may well have two bidders for About.com, the business which it actually wrote down by about 200 million last quarter. Now, Agnes, you've been looking at this. If they manage to sell this for, say, 300 million, this will leave them with, finally, a decent amount of cash in their balance sheet. What, half a billion or something?
Something like that.
And after all these travails that the Grey Lady's been through, this suddenly they've got this surfeit of cash. So the issue is, what do they do with it?
Right, exactly. And that's where it's going to become kind of challenging. I mean, one thing is that they haven't paid out a dividend since 2009, so that's going to be one temptation. Right?
And of course, the big thing about the dividend is the fact that the company is controlled by the Sulzberger families.
That's right.
And they control the paper through this sort of secondary voting stock, but they also own, what, 18, 20% of the stock, something like that?
I believe, I'll have to go back and double check those numbers, but yeah, I mean, and the thing is, I mean, again, 3 years is a long time. They had been patient, and, you know, again, 3 years ago, the Times was on the ropes, and it was the right decision to suspend the dividend, but I think that it's going to get harder and harder to justify when you have this pot of cash without, at least so far, any plan of what to do with it. Yeah,
and of course they've also got the new chief executive coming in, Mark Thompson. They're hiring from the BBC. He starts in November. But I mean, does that not give another issue? You've got all this money. The new CEO is coming in. He's not yet elucidated his strategy. The last thing he probably wants is to lose any of the potential cash he's got for whatever purpose.
Right, exactly. And I mean, but I think the other issue too is going to be, there's been lots of speculation about some kind of acquisition. You know? I mean, again, the Times is trying to transform itself into kind of like a digital powerhouse, and one way to do that, of course, is just to kind of acquire a company that has some kind of
which haven't gone too well in the past.
And again, you just look at About.com. I mean, that was pretty disastrous for the Times. I mean, again, as you said, they had to write down half of that. I mean, they may get some of that back if they sell it, but it hasn't been a winning strategy so far.
Yeah. But I mean, here's the issue you're looking at now this morning, which is, okay, they've got this 500 million, or they may well have 500 million of net cash after selling About.com, maybe a bit less. But it's not as if that cash has necessarily come from the operating business. It's come from sales and divestitures.
Exactly. I mean, they've been basically, whittling down to get back to what their core business is, which is, newspapers.
Which is great, but I mean, is it making enough money? Is it actually even generating free cash flow? All these things we've got to...
And that's something that we want to look into, right? I mean, if they're going to reinstitute the dividend, there probably should be some metrics about,
when and how,
and what kind of targets they should be hitting. If they're going to increase the dividend at a future date or any of these things, but it's worth considering.
Yeah, but I suppose at least with the family in control and having taken, I mean, there has been talk of a little bit of intra-family strife and concern about who does what. So I suppose you can throw them a bone and not use too much money. You looked at this last year. What was the analysis you looked at?
I think we said maybe 3 cents, which is much lower than about a quarter so that they had been receiving before. But it would be basically $18 million, and I mean that again, at least it's something, and it's not necessarily going to break the bank.
Yeah, it throws the family a bone. But then I suppose hopefully the company would then say, look, we're going to institute a series of measures we've got to hit. I mean, Ford did it, although there was a degree of covenants around what the Ford family was allowed to do before they could start paying themselves a dividend. But
and also articulate the strategy of what they plan to do.
Right, which of course is up to the new CEO as much as anyone else. So maybe it's more of a waiting game, but we'll definitely keep an eye on what New York Times does with its money, and we'll have more breaking views tomorrow.